I'm going to share with you guys why earnings do not matter right here, right now. In case you didn't know it, we are in the thick of earnings season, and everybody always says earnings drives the market, but does it really? Because when we look at this one chart real quick, I'm going to show you why that is bucking the trend out here this morning. But before we look at that chart real quick, let's take a look. We have a lot of very important earnings coming out this week. This morning, we already had McDonald's coming out, but then tomorrow, we have PayPal, we have AMD, we have Microsoft, we have Starbucks, we have Pinterest. Then on Wednesday, Meta, ARM, Qualcomm, Lam, just to name a few. Then on Thursday, we have Amazon, Apple, Intel, Roku, DraftKings. So we have a lot of very key earnings coming out this week. And will they influence the market positively or negatively or not at all? We look at the expected moves. PayPal and AMD are going to be the big winners out here for Tuesday. And on Wednesday, ARM is expected to move plus or minus 12% on the day. Now, recently, we've seen a rotation out of the tech-heavy stocks. Take a look at Google. They come out with earnings, gap lower, and they continue to push lower all the way down towards the 127 Fibonacci extension. But what about when things like this happen? McDonald's stock falls after a triple miss on profit, revenue, and comparable sales. Well, we come over and look at McDonald's stock this morning. I want you guys to look at something very clear. Right now in pre-market, it's up $1.60. If we dive down and we look at the 5-minute chart, we show extended hours. When they first came out with earnings, dip lower only to come back up higher. So if earnings are so important, then why is McDonald's trading higher if indeed they had a triple miss out there on their earnings? Explain that to me real quick. This morning, we want to pay attention to the dollar index. And on the 5-minute chart, we see the dollar index ripping and roaring at this moment. And we're going to see, will the dollar index make another run up here towards these highs? Now, normally a stronger dollar is weaker out here for the stock market, but we also want to pay attention to what is the 10-year yield doing? Right now, we see the 10-year yield actually on the decline. That is slightly favorable for the bulls. And we come over and we take a look at a price of gold this morning. Gold shot up last night only to come back down. Gold right now is only up $7 on the session. Let's not forget the volatility index right now in pre-market is up 24 cents on the session. And last week, we saw a spike in volatility, which also caused the ranges in the indices to expand substantially as well. We come over, look at the fear and greed index. Right now, we are sitting at 45, and we're going to see, will the pendulum swing back over into fear, or are we going to go back into greedy territory first? You guys let me know what you think in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. So as we look at the economic calendar for today, well, it's a little bit lackluster. We have no major economic news to contend with today. All the news for today is mainly going to be earnings, earnings, and earnings. And as we saw earlier, McDonald's really did not care about their earnings miss. So how is that going to affect the remainder of the stock market? We look at the Dow. The Dow right now in pre-market is up $1.87. We take a look at the small caps, which have been on fire, and they're right here near the recent highs that we've seen, up $1.95. We come over and look at the Qs, and remember on Friday, the Qs had an inside day where the candle that formed on Friday was a doji candle, but the high of it was lower than the high from Thursday. The low of that candle was higher than the low from Thursday. So what does that set up? It sets up a breakout or breakdown scenario. And as we look at this on the daily chart, the MACD looks extremely weak. We look at this on the 4-hour chart. MACD indicator may be trying to firm up here a bit. On the 30-minute chart, we see we already have a separation of the two MACD lines, but the problem is we're still staying down at these lower levels. Then when we jump down to the 30-minute chart, this is where it gets very, very dangerous. When the MACD indicator gets back towards the zero line, if we are still consolidating near lower prices, that could be nothing more than a recharge point, and we could see another leg lower or at least sweep these recent lows. Now, if you look at the range on Friday, it was definitely a lot smaller than the range of the two prior days. And how can we tell this? Look at how tall this volume profile is compared to the other 2 days. Now, when we look at the volume profile levels, we want to look at this as value area low coming in at 460.93. The point of control will come in at 461.81, and value area high will come in at 463.72. Well, if you look in pre-market, we see the Qs are actually trading above Thursday's high, which is good if you want to be bullish to market. And here's what I'm going to say. As long as we're above value area high, I still want to lean towards the buy side of the market. Let's not forget we have a gap over here and we have a structure breakdown point that we still have not come back and tested. Now, Do I think we're going to come all the way up here and fill the gap today? No, I do not, but maybe we'll be able to work our way up towards this gap support. Now, where I'd want to turn bearish for another leg lower and potentially sweep in the lows is if we can get back below value area high. Anything above that, I'm basically leaning more towards or favoring long side trades on the QQQs. As we jump over and look at the futures markets, what do we see? Well, we're trying to make our way into this minus development area. We have this high volume area. We also have this spike right over here. Now, this candle spike is going to come in at 19,390.50. And the question is, can we spike above it? And if so, can we hold it? Or are we going to start coming back down? If we look at last week's profile, it's very thin all along this area, which is very susceptible for a move back up higher. Also, I want you guys to look at this structure breakdown point, candle wick to the candle body. This is going to be a point of interest moving forward, anywhere from about 19,654 to about 19,695. Now, I'm not saying we're going to make it there today, but we do have a lot of things to contend with out here this week. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, pass in as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. We do have a lot of things to contend with out here this week. For instance, we have earnings coming out, and let's not forget, we have the FOMC meeting coming out in essentially 2 days, and right now, we can see the market is priced in a 95% chance the Fed does nothing at the next meeting, but then in September, they start aggressively cutting rates. Now, one thing we want to listen out for during the FOMC, does Jay Powell basically lay the framework to where he's going to let us know exactly when and where they're going to start cutting interest rate at that meeting? Now, when we dive down and we look at the daily profiles, notice last night, we opened up, we rallied up, we made it above all the areas from Friday. We even made it above Friday's high. Now we're coming up into this area right over here, and it's going to be critical that we break it. And one of the things I want to do, I'm just going to go candle body up here to the candle wick. You can see we came into it, boom, rejected down. We're going to come into it again, it appears. Will we be able to make it to the other side of this area, which is really right around 19,391-ish. So will we be able to make it all the way back to the other side or not? This is where the overnight volume profile levels can also give us an early entry into the market. If you notice right now, value area low and value area high from the overnight, which are still developing, are above all the profiles out here from Friday. So what if we start getting above value area high and we start coming back down? Well, guess what? That will give us an early entry into the market where we can start playing the rotation on the way down as we try to target some of Friday's volume profile levels. Now, as we come over and look at the SPY right now in pre-market, it's up $2.27. And let's look over here to the left. What do we see? We have a gaping gap above us. However, are we going to be able to push all the way through this high volume area on the composite profile? Look at the MACD on the daily. It looks extremely bearish at this moment. On the 4-hour chart, you can see it's starting to try to base out a bit. And on the 1-hour chart, we already had a separation of the MACD lines. But here's where it gets dangerous. On the 30-minute chart, we are already back up near the 0 line. Now, if we cannot get out of this lower level consolidation, this could be nothing more than a recharge point. And we see the S&P basically come down and start sweeping the lows. Now you can see we're not that far away from gap resistance, which is really going to be right around 549.19. Right now, you can see we're trading above value area high, which comes in at 545.09. The point of control will come in at 544.45. And value area low will come in at 542.33. From looking at the daily profiles, as long as we are above value area high, I want to stay on the long side of the market. But if we start dipping below it, then I want to play the rotation on the way down. Now, to the upside, we also have this structure breakdown point. You can see it right over here, candle body to the candle wick. You can see we gapped right below that level. This is an area which could act as a magnet trying to pull price back up towards that area. So we most certainly want to pay very close attention to this level, especially if the market starts to rip and roar out here today. One thing I also forgot to mention over the weekend was the fact that we have this A to B equals C to D pattern. Now, we can break above the highs from Friday. If you look, the ABC completion brings us just slightly above this structure breakdown point. So the key point would be, can we break the B point at 547.24? Now, as we come over and look at the futures markets, what do we see? Well, we've basically come where? Right up towards this high volume area, which I warned you guys about in this weekend's video. Now, the question is, do we get knee jerked on the way back down, coming back down towards the 5,500 price point, which is the next high volume area on the profile, or can we push up and through this area? Keep in mind, we have a structure breakdown point, which we talked about similar to the NASDAQ, but right up here, anywhere from the ballpark of a price point of 5,542 to about 5,552. This is one going to act as a magnet. The problem is we don't really have any economic news out here this morning that can really drive the markets up that high. And also, one thing to note, when you looked at the SPY and the Qs, we are going to have a gap up this morning. Now, we don't see that gap as we look at the futures markets, but that is something that we are going to want to pay attention to. Now, if you look overnight, what do? We rallied up, consolidate, they try to push it down. Now we're back up here again. So this is one attempt, two attempt, three attempt. Will we be able to push up and out? Keep in mind, out here from the 25th, we still have this spike high coming in at a price point of about 55.33. Then we have that structure breakdown point just above us that could act as a magnet trying to attract price back towards that area. Now, this is where it's going to be critical as well, because you can see so far the overnight volume profile levels are stacking up above all the value areas out here from Friday. So if indeed we do start to see weakness in the market today, the overnight volume profile levels could give us an early entry into this market. So now let's go ahead and take a look at the overnight volume profile levels. Look at this last 30-minute candle that we're on right now. What do? We spiked up. We didn't quite make it up towards where the top of this wick is, but we did make a pretty good attempt. Now, keep in mind, we are going to have gaps in the market this morning if indeed the market's open at the current levels. As you can see, value area high comes in at 19,319.75. The point of control will come in at 19,287.75. Value area low will be 19,252.25. Now, currently we are above value area high, but you can see we're starting to come down. If we get back below the overnight value area high, then we can target the point of control. We can target value area low. We can target Friday's value areas with the potential to flush through the lows out here from last Thursday. Now, do I think that's likely to occur today where we flush those lows all the way down here from last Thursday? I don't think it's very probable, but we still want to be open-minded to it. Now, as long as we are above value area high from the overnight, I want to stay on the buy side of the trade. Or even if we dip down below value area high and we start coming back above it, from that point on, I'd want to be on the buy side of the trade. As we jump over and take a look at the S&P 500, you can see we wicked up. We made it all the way to a high of 5534.50. Now, value area high will come in at 5527.00. The point of control will come in at 5522.50. Value area low will come in at 5512.50. So how do I want to handle this? Well, one, we've already been above value area high. Now we're below it. So what does that mean? I want to be looking for sell side trades. Target one being the point of control. Target number two would be 5512.50. Anything below that price point, then we want to focus on the volume profile levels out here from last Thursday. Now, I do want to mention, if we start breaking back above value area high, I want to be on the long side of the trade. If we come all the way down below value area low, then we start coming back up above value area low, I'd also want to be on the long side of the trade. And in the event that we come crashing down at the open and we come all the way below Friday's value area high, we start coming back above Friday's value area high, then I'd want to go ahead and target the overnight volume profile levels as well. Now, if you guys want to learn how to trade double bottoms using order flow, watch this video right here.